Following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, welcome to the Friday edition, Friday, June the, I wrote it down many times, 22nd, right? Yep, June the 22nd edition of the Tiger Technicians Hour. I'm here Monday, Wednesday, Friday at this time, 11 o'clock till noon. My pleasure to be here, Eastern Time that is. Straight after me today will be Nico DeHaan. Great show as always. What a knowledgeable person in that field of just the body, food, exercising. Great. And we've got, let's see, we'll go to, well, thank you, Steve, for a great 2 hours. Steve kicks us off. Steve Rhodes, 9 o'clock till 10, and 10 till 11 is the duo, Steve and Tom. Tom is away today, so it's just Steve, great 2 hours. Then I come on, we got Tiger Technicians Hour, and then we've got Nico DeHaan. Then what happens is, we have a little bit of a hiatus, and then 3 o'clock till 4 o'clock you get Dave White, fabulous technician, just a real master of technical analysis, who also has, he's our technical guru. He understands just so much about the high-tech area. Then, of course, 4 o'clock till 6 o'clock, Tom O'Brien wraps the whole thing up, and have a great weekend, everyone, after that. What's most important as far as I'm concerned, and I did this yesterday, I wonder if I've still got it on here. I'm going to do this. Give me 1 second, because I think it's just worth it. So get out of that. You'll be able to see this live. It's not a problem. What I'm going to do is I'm going like that. Okay, this is what my subscribers get every day. Oh, do I have it from yesterday? Let me just check. Yes, I think I've got it yesterday. I hope this is it. Yes, this is yesterday's. Now wait, you can't see it, so I need to scroll it over to here. Let me see if I can do this. I'm going to do this. All right. I want you to see what my subscribers get and why I make a big deal about some of the things that we have in terms of, there it goes, a little bit bigger, a little bit bigger, a little bit bigger, a little bit wider, and there it is. Okay. So I'm going to now see if I can place this right into this particular area right here. And you'll be able to see, I'll ask the den, and I'll ask them if you can see it. Oh, I should be able to do it right here. But the question is, can you see this particular chart that I'm showing right now? It says very, very, I've never done this before. It's the first time I ever did it. And how many? Let's see. I do a market letter almost every day. Even when I'm on vacation, I try to do it every day. And if I'm not, it's no more than a day or two that I don't. So, yes, you can see it. So, if I do at least six charts for every session, and I do 5 days a week, let's call it an average of 4 days a week, just for fun, the 52. So let's just say the 200 times 6. So that is a week. That's 1,800 or something like that. Yeah, just think about that. There are thousands, in fact, it must be over 100,000 something charts that I've sent since I've been here at TFNN for about eight years. I've never done this. My overview of market today, what I did yesterday, I said, big, bold, VIX. Oh, did I mention the VIX volatility index at any point? And why did I do that? I did it for a specific reason. It was really only one reason. And the reason was, because as far as I'm concerned, I've been talking about this for a long time, in the methodology that I'm using, I think it is imperative for me to constantly focus on what I know very well, and that is the volatility index, the techniques that I've developed, the proprietary techniques, as well as the short-term trading index, the TRIN that Richard Arms developed. I only use certain numbers, in fact. However, when I look at this, what I'm looking at is that the Dow has been going up as the volatility index slumped from 2773, and that's when I was talking about the chance that if it was holding here and held the mid-20s, and then got to the 30s, I could see 28 was the number I was looking for. We got to 27, 73. But the next volatility number would be the 35 area. And if that was pierced, I could even see, and in fact, I still see sometime when we have the really big sell-off, and I don't think we're ready for that yet, we'll be looking at the 40s. But I don't see it in the cards just yet. There's too much going on. Now, this is very important. Why did I talk about the volatility index? And you can see I'm circling it right here. Because in the volatility index, what I read is that if, for any chance, the volatility index was able to hold under 20, that at some point with this move down, it looks almost like an A to B and then a C to D on the way down. I'm using different letters, of course, from the 2493, breaking underneath the 19.87 area. Actually, I've got my cell phone here because I wanted to see exactly what you're looking at. You can tell that we went underneath 20. We went down to 18, 19, under the 1987 support. Yesterday we went down to 16.77. But up until that day, which was the 21st, the day before, no, that was yesterday. This was the report for yesterday morning. Before, this was the report, the overview went out at about 6:30 or 7 in the morning. I said, the VIX. Then I say, seriously though, we have to make this as simple as we can. The VIX slumping to the 17s is really good. The ChapmanWave trend gauge gave a fairly high reading, suggesting that within 1 to 2 sessions, a decent rally attempt is likely. That's what we got early yesterday morning. And all it says, this particular part of the index says, it's a rally attempt that should give a very nice up move, which it did. The Dow went quite a bit higher. And then, bam, we got the selling. Then yesterday, the volatility index the trend index went even higher. But look what happened yesterday. And then I said, whoops, a decent rally attempt is likely. Today, watch the Dow support at 1279 first, then 12740 is next. If it goes, any rally to plus 30s or more that holds into 2 p.m. could challenge the 12,890s. G and the XLF are doing well. So that was yesterday. So now what I want to do is I'm going to get rid of that. And I'll show you the what I sent out this morning, if I can find it. And this morning would be, wow, there are a lot here, huh? I wonder if this is it. No, that's the old one. All right, this morning would be, make that a little bit higher. Okay, there we go. I think this is it. If it isn't, no, it isn't. Okay, well, I'm going to get out of this. What I want to show here is where the volatility index is now. Yesterday went from 1677, that's the low that it made as the trend index said it could rally, and that's the rally that we got. And then the volatility index skyrocketed to 20.48. And today it went down to, that was yesterday. So this went out this morning and it closed at 18.68, under 20 again. That's why we haven't so far gotten the kind of sell-off to the downside, because this volatility index, as I read it, shows buying pressure. Every dip so far today has had some kind of buying. The day is still young. So we've got to watch this closely. That was the VIX yesterday. This is the VIX as it is right at this very moment at 18.68. As long as that holds towards the under the 19 area, that can really help the market. Now look at this 120-minute chart. It has this up channel. These are all the techniques I show subscribers every single day because it's very important for me, for people to understand that. JP Realty in the den says, Basil, dollar trend, 120 shows selling pressure. You know what? It shows the selling pressure. I have different readings, of course, for when I mentioned that the ChapmanWave trend gauge gives a reading that says that within 1 to 2 sessions we should have a rally, even though it looks like we could be going down further. It would be a counter-trend rally. Just as when it's at a certain point of the downside, I say the very next day, regardless of how high the S&P futures are pre-market, we should still see the Dow at least go to a minus intraday early in the morning. So, and I don't use those. When you're in the 120 to the 70 or so area in the trend, I just ignore it as an indicator. So that's my answer to that. So now look what's happening. The 200-period exponential moving average, this is what I said this morning in this particular blurb here, my overview. Watch the 200-period moving average of 12,672 because the Dow needs to climb above it. So far, the high today is only 12,660. So this is the kind of detailed information I give. And then I show this is the trend index, and this is the Dow daily peak C 12,898. That is a very sharp decline. To me, this says it's limiting the upside. If the Dow pulled back, and it only pulled back to say that somewhere around here, the 12,000, oops, I didn't mean to do that, 12,720 area, or 12,000, held 12,700. Right now we'd be having a bit of a rally, this is that counter-trend rally, and that rally should take us a little higher. But we do a little nibbling on the long side, and we did some nibbling on the short side, because I'm stretching my limits here. I'm trying to, as much as possible, avoid the indexes, because they're very choppy. I'm trying to go for the stocks that I feel very strongly on my monthly charts, on those stocks have changed the trend to down. That means the tide is with me, and I'm trying to go with those stocks as shorts. And on the long side, I'm trying to look at the ones that have held really well, or perhaps are IPOs or something like that, haven't got that baggage of the history behind them, have the opportunity to move forward. I've also said to the Den today, I would like to have a lightning round. They've already given me a whole bunch of charts. I'm going to have to go back and check what they are. I've already done some work on them. But let me just go through this. The Dow right now is at 12,000, and then we've got callers online. I'm going straight to my callers, then we'll do the lightning round. So Dow's up at 57 at 12,631. It's absolutely imperative in the next 2 days that the Dow holds 12,530. I'd already said if close under 12,580, which is what we did yesterday, to me that would be a signal to say, hey, just be really careful here. Be even more selective on the long side. Be even more selective on the downside. I'm not interested in the golds or the silvers. I'm just focusing now on the sectors and the stocks within the sectors that are possibly really weakening or strengthening. So the Dow says to me, certainly a close under yesterday's low of 12,561 is negative, but I'm going to give it room. 12,530 means that you're going to test the 12,482 200-period exponential moving average. That's going to be absolutely key. I still see some internal strength because bonds, the TLT is down 1 at 125.67, and that says to me right now, USU 12, we're looking at 148.10. It seems to me that bonds, the bond contract, this is the this is the September contract, is holding well in a low level consolidation rather than the high level towards 152, and it could be arching over. And if it arches over, it says that the Dow, in fact, could get some more strength, especially if the volatility index remains low. So let me just quickly run the numbers. The comp is up 17 at 28.76. The S&P is up 5.5 at 13.30. Not bad, but after yesterday, it's nothing. This is just nothing. So I'm going to look at the XLR a little later on. That's the airline index. Gold is down 2 at 15.63. Silver's unchanged. Bonds are down 24.30 seconds.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gained access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. I had some requests in the den. I said I'd be doing a lightning round. We're going to go to my callers first, but we're going to be looking later on at FSLR, BRCM, Corn. I don't know if it's Corn the contract or Corn the symbol. It doesn't matter. Apple, DZZ, that's 200% short gold, JLD, and Google. So we've got a bunch coming up here. First, I'd like to go to Mike in New York. Hi, Mike. How are you?
Good. How are you?
Very well, thank you.
Is it too early to short O'Reilly Automotive?
You know, O'Reilly Automotive is one of those stocks that I always look when I get the stock up and I look at the chart, it just looks at me and it goes, it sticks its tongue out and wags its fingers at me and says, "Ha, missed me again." It's just been an unbelievable stock. There's a technique that I talk about in the ChapmanWave, how you can use the 9-period exponential moving average as a support or a roof, as a barrier. And in this case, it's walked the 9-period exponential moving average, as you can see in the weekly chart, folks, in the monthly chart. When you look at my charts, the one on the left here is daily, the one in the middle is the weekly, and the one on the right is the monthly. I've expanded the one on the right, and this is just unbelievable. It is not closed under the 9-period exponential moving average since it broke above it December of 2008. Now, if that is not a technique, that is just an unbelievable technique. And it is so hard to believe. Even now, you could say, wait a minute, it's never gone below the 9-period moving average since that day, not even this month. Why not just buy it here? Because every other time you've bought it, you bought it even at the highs, you were looking at even higher highs. There's a very big difference. The MACD is now stopped flattening out and it's turning down in the monthly. The stochastic, it's still at 91, which is just fantastic. And the MACD fast moving average is it hasn't even flattened out yet. So I have to go to other time frames because my monthly chart is still spectacular. Below 88.20, well, by then it'll be 88. So if it closes any month, if it closes under, say, 87, that'll be the first time it's closed under that since it broke out in December of whatever I said it was, December of 2000 and, I better check, 2008. Unbelievable. So with that said, now we get to something very interesting. Because I've been looking at the auto parts, as you know, and I, in fact, are short one of the auto part companies. Starting to make us some money here, but it's just the first sign. The reason is you can't expect that a stock that you are short, if it doesn't go down sharply very quickly, it says, number one, that even though the technicals are fading, the price is still finding buyers are still finding it attractive and still holding the price up. And it means that when the technicals turn up, it might not go very much higher, but it's in the trading range. So this stock right now on the weekly chart says there's a chance that we're starting to form a rectangle trading range that says it is topping out, it is slowing down the momentum, because even the weekly chart, since it broke out above the 9-period moving average back in August of 2011, not once did it close until the sharp move down May of this year, the week of May the 18th. So here's my answer to you. I'm going to suggest starting a small position now. The question is, do you start after this? So in the weekly chart, I've got it as G/C, and that says it could be making a peak G, or it's a C that's going to have another rally in this rectangle just to squeak fractionally higher than 107.13. And if it does that, that'll be the opportunity to see whether or not you want to short, and you have to reassess right at that moment where the technicals are. Or I would say to you, another way to do it is that you can start. You wait to start a position on a bounce, and that bounce would be above in the daily, which is it's made a peak E, with the stochastic way down at 66 in the MACD, just about to turn negative. Here's my recommendation. I'm going to suggest you start a small position. I really mean a small position right here at 96.98. Why? Because that position you can give a stop, 96. You can give it a 3-point stop. What is that? That's 3-point stop. So it's like a 3, not even 3. Is it 3%? Yeah, just under 3%. So it's a 3% stop. And if it breaks out above that, then you stay out of it until this candle, the candle from yesterday, until it tests the top of that candle. So start a little position, and I'll tell you what will happen. If by the end of the day it's at 96.92, if it closes under 96.20 today, you're in a great position. And if it closes above 97.30, you say to yourself, all right, I've got to be a little careful. And then we'll look at it again next week. Good. This is one to keep your eye on. It's going down, but it's the timing. So thanks for calling, Mike. We'll go to Peter straight off.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter. You get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour. Dow's at 53, S&P's at 4.36 after the move yesterday into downside. That is pathetic. The day is young. I hope, in terms of bouncing, I hope that there's some kind of a bounce here, because I tell you what, if that volatility index starts to climb back into the 20s, we got to be careful. So we're going straight to Peter in Park City. Hi, Peter. How are you?
Good, Basil. How are you?
Very well, thank you.
Hey, I was wondering if you could take a look at the Euro Daily. After yesterday's move, would you believe that we just did the C1, C2 for the third out of the fourth time we've had these highs?
You know, it's so fascinating. I'm actually building up a huge page of those C1, C2s. I can't believe how these techniques just sort of develop, and then out of the blue you say to yourself, wow, that is just such a great, it's such a nice thing to be able to identify that there's a particular pattern that should occur, and if it doesn't occur, you've still got very strong metrics, you've still got very strong parameters to use to keep the conditions very strict. And what we're looking at, folks, is EUR USD. This is the currency pair. And what it did was, back in, let me just go to stretch this out. Now, if you're looking at my charts, this is the daily. It's a little squashed. I'm going to try to open it up. Here it is. There it is. Now, if you're looking at this, what you will see is there was a series. You see the blue line, folks? That blue line, that sort of mauvey light blue line, that is the 200-period exponential moving average. That moving average was resistance with a peak C1 and a C2. So it didn't get, there it is, it didn't get to D, but it just by a fraction missed it, and it pulled back sharply. It ran back up with another peak A, B, C1. If you know the ChapmanWave, I was going to show some of my techniques, but we won't have time today. The premise is that from a most identifiable low bar, you should be able to get 4 higher peaks to complete a buy mode. It can go higher, but the objective is to go to 4 peaks. But there's a variation in the ChapmanWave, and that's in my CD introducing the ChapmanWave methodology, where if you just fractionally miss it, but the technicals are failing. Everything about the technicals say that, you know, that last leg up should have been a higher peak, but in fact it wasn't, and the technicals are failing. It says be careful, because you could come down very sharply as if it was a peak D, and if you can identify it, even if it goes to the D afterwards, it doesn't matter. You're out with a profit or safely, and you miss a bit of a profit if it goes higher than that later on, more of a profit. So this is a safety factor. Well, lo and behold, it does it twice, then it has a perfect peak A, B, C, D. That's what we expect with the doji candle. This is the euro-dollar currency pair on the 1st of May at 1.3289, and then it pulls back really sharply, breaks the left side, right side price time match. I don't know if I got time to show it. Yep, I do. There it is. From the low of 1.26 back on the 13th of January. It takes a little, just 2 bars longer to break it, and then it slumps down to 1.22873. Now Peter's asking a question, and this is what Peter and I were discussing way back then. It sort of gave him a heads up because he loves to trade. He's a great trader for the currencies, and he said, I'm going to treat it as a C2, and that possibly we could be going down from there. And look what happened. We had exactly the same thing. Now, there's another thing that I love to study, and I'm going to make a chapter on this called characteristics. If you can study the characteristics of whatever you are following, the characteristic here says 3 out of 4 times, it looks like this particular failure pattern has gone to a C2 and then plummeted, even a C3, but a C2 definitely, and once it went to a D. So I'm saying, hey, it's broken the uptrend. This says to me we've got to be really careful here, because it failed just fractionally to go to a D. The stochastic is back under 80%. So this is what I'm going to say. The MACD is still a little bit, the fast-moving average is a little strong, but it's way under the percentage line, the 0% line. So here's my recommendation. In terms of, are you on the short side of this now?
Yeah. Yeah.
Okay. I'm going to say stay on the short side. You never know what's going to happen over the weekend. You might, Sunday night you'll be looking at the trade. If it does spike and it goes above today's high, that'll be above the 9-period moving average. I say be very careful at that point. I wouldn't add to the short, because the fast moving average of the MACD is still a little bit strong. But look at the weekly chart of the MACD. It is terrible. It is not showing any strength. It is not. It's potentially a W, but the stochastic's still at 19.6. It's under 20%. I'm a little concerned in this particular move, which is why I wanted to add to the shorts today, and I wanted to just nibble at the longs again to see if those stocks are still doing well. I'm getting very close to possibly going to the short side on the index, but I'm not going to do it until I see where we close today, and a lot's going to depend, I think, on how the euro and the VIX and the bonds act. This is a puzzle that we've got to look at, but definitely on the euro, if I look at the 120-minute chart, I looked at it last night. Yeah, this is again gone A, B, C, D, another peak D, pull back, and it's now, You see the way the 120-minute chart is giving no signs yet of going over 20%, but it is a slightly positive higher low than it was before. I'm going to watch this closely. If you are short, I would just say 1.2593. If it closes above that, I wouldn't be short. I'd have to allow it to bounce, but that would be the level. That would be the strong resistance I'd be looking at. Hope that helps you.
Yeah, it does. Real quick. I mean, as I look at this right now, it looks to me like it wants to go back down and test that 122.88. And if it does it fairly quickly, it looks like that could really set up a pretty good rally. being that what looks like potentially the stochastics and MACD could be much stronger than at the first low.
That's right. Not only that, look at the monthly chart. Look at this, the rhythm of the left side to the right side in this M pattern. The M pattern eventually, when it breaks to a lower low, suddenly gives a burst of energy, and that burst of energy, you could take it back to the 1.30 area. But I'm watching this real closely. This coming week is going to be really important, because if it cracks 1.87, it sounds like it's really far away, but we know how quickly these things move. If it cracks 1.87, it's in real trouble. Right now, the monthly chart is still not very good at all.
Basil, that's 1.187.
Did I? Oh, is this second time? I said to myself, 1.87. What am I? But I didn't want to. It was too quick. So, folks, that wasn't 1.8. That's 1.187. You must have said to yourself, what? Yeah, 1.187. That's what I meant. I'm looking at this.
Yeah.
How could it be 1.8 when the last one was 1.2? Okay, thank you for correcting me. But you know what I mean.
Yeah, Basil. Have a great weekend.
Have a great weekend. Thank you, Peter. Let's go to Ken in Fort Madison. I've never heard of Fort Madison. Fort Madison, L.A. Is that correct? Hi, Ken.
Fort Madison, Iowa, yeah, down in the southeast corner.
Iowa, okay, good. You wanted to look at?
I want to look at WLT. I think it's a coal producer.
Yeah, that's Walter Energy. Walter Energy, in the monthly chart, we just looked at this at the euro. It looks like the euro chart. I would not be. I think we looked at this once before. I don't know if you called, but I looked at it just fairly recently. And my concern was it might rally, but the monthly chart was so weak. Are you short or long?
No, I don't own it. I'm just looking for
Okay. My recommendation, don't hold it at all right now. I would not do anything. But I'm going to do a little work over the weekend on this chart, because I've looked at this very often, and it's telling me something about this particular, about the industry and about this particular stock. And I want to do more analysis, because if this thing takes out they said WLT is at 45.74. If it takes out in the month of June or July, certainly July, if it closes under 37.80, this thing could go all the way back to the teens. I mean, this is the way it's looking. It cannot find any strength whatsoever, and the MACD is something's wrong with this. And this was a favorite stock. I think it was the favorite stock of Kramer's once upon a time. I don't think he has it anymore, but it went to 143.76. It's at 40. Something is very wrong with this chart. So it has to hold between 42 and 37. And then start a really good bounce, or else this is in real big trouble. So give me a moment to, over the weekend, I'm going to do some work on it. Call me Monday or Wednesday, and let's see how it's doing, because if it's able to have a bounce right now, it's really important that it closes above the 48.99 high of June the 20th, because that's the only way it's going to save itself, and it has to do it fairly soon. So I hope that helps you.
Okay, thank you. If you have a chance, take a look at WPRT, will you please?
WPRT. Okay, I'm putting it on my list. This is the lightning round. We're going to do it right now. So, folks, WPRT is on my list as well, so I'm going to put that down. So here we go. First one is Kip wanted to know, and the Dan wanted to know about FSLR. Oh, and I got a question from Larry about bonds. You know what? I need to look at the bonds right now, if you don't mind. I think it's so important, because the bonds are not participating. They're down $1.18, the CLT. I just need to look at this, if you don't mind, folks, because if I can put the picture together with the bonds, what we're going to be, bonds made a peak E-top in the continuous contract on the 1st of June. Its pullback is making the pattern that I call the dreaded H, but it hasn't done it yet. It's in the process. My biggest thing here is that the weekly and the monthly charts, the weekly and the monthly technicals, are still very strong. There's been a 24-year up channel that's been continuously running, and that particular up channel has broken to the upside. So it's 31 years, I think, but a 24-year up channel, and that is in the upper part of the channel. Normally what happens, you break out away from the resistance line, you go above it, and then you come back inside. So I'm watching this really closely, and I'll tell you why. If money starts to come out of bonds, and the volatility index can hold low, and you've got crude oil that is pulled back, which basically is a tax incentive. I mean, this is a big break for everybody. Then I will not get the leg D, which I'm anticipating in the weekly chart, the high of the 1st of June, but we could have a sideways consolidation in bonds, and that's going to be very important. So I'll make it very clear. Volatility index stays under 20. I'd prefer it under 19, and right now it is at, tell you what it is. Right now, volatility index is at 18.59. The bonds pulling back, don't have to pull back all that much, but I have to tell you that if the bonds close under 147.25, and in the USU 12, that is the USU 12, that's the September contract, if they close anytime in the next 3 days below 146.28, let's call it 146.5, close below that, then I'm looking at money coming out of bonds and going into stocks. So I'm going to make it clear. Volatility index back in the 20s. I'm pretty sure bonds will go back higher, so that keeps them in this trading range. And I would also be watching the XLF, because if the XLF, together with the volatility index low, is able to get from the 1431 area to the 1460 or break to a leg D above 1463, that'll be very positive. So I'm giving you my outline right now. Now let's go back to FSLR, which is, so I'm just going to sum it up. My TLT is still in the sell mode. I haven't yet that is a sell mode in the daily and the 120-minute chart. The weekly is just in a consolidation. So FSLR is in leg D up, that is at 16.12 right now. The MACD is rising. The stochastic's at 83%. That's very good action. So what would I do? If you are long, hold long. And what I would say right now is that the 120-minute chart has resistance right here. It's added to this period at 1616. That's the 200-period exponential moving average. My thinking here is that FSLR, this is First Solar Company, will break above. It'll get to the 17s, pull back, retest between 1620 and 1590. And then, if it's able to climb into the 1745 to 1750 area by midweek next week, that'll be the first time in, I couldn't even tell you how long, well, this is not a lightning round, this is too long, first time since the week of February the 17th, where it was at 45.20, it'll be the first time that it's able to close above the 9-period moving average in the weekly chart. So far, it's just I'm calling it a bounce. The monthly chart is horrible. On the bounce, that's what you want to see. Where would I put my support? If you're in a little lower down, 1464, if it breaks 1464, closes under 1464, you can expect to test the 1420 to 14 level. So those are the if it closes under 14, I don't really want any part of this. I'd get out of it. But right now, this is nice action. Just a daily chart that's gone to leg D. Weekly chart still in leg A, and it hasn't gone above the 9-period moving average. Ugly, ugly chart. This is a counter-trend rally. So that's kept. Art wants you to look at BRCM. Broadcom company trading at 33.92. It's made a peak C. Now, this is very interesting. There are so many charts that have done this. Even the Dow's done this, gone to a peak C and had a pretty sharp decline. I don't like the way these declines are occurring at the 200-period moving average for a number of these stocks. 34.81 is the level to break. By Tuesday afternoon, Wednesday morning, Broadcom has to be climbing and has to push above 34.82. If it can go over 34.82, I'm pretty sure it's going to make leg D up at 35.55, and that'll start leg D. The MACD is good. Stochastic is holding well at 79%, and the support, if Broadcom closes under 33.20, I don't want any part of it. I'll be right back with the other call. Put
the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
All right, folks, the last little segment that we have here, I'm going to run through these stocks. You'll see how quickly I can do it if I really want to. But sometimes it's just fun to go into the details. That's what we're really all about, teaching. Don't forget to go to the front page, check it out. You know, if you get your Tiger Dollars, you'll be able to get 7 absolutely fantastic, I know they're fantastic, webinars that are coming up that'll be free from all of us hosts. If you get these Tiger Dollars, I mean, more of a bargain, $1,000 bargain. It's just unbelievable. So check it out for your Tiger Dollars, and for all of our subscriptions, you can, it's a great way of getting a discount on your subscription. So here we go. So we did Art and Broadcom. Let's go to Mitch on corn. I'm going to do corn as a continuous contract. The continuous contract is, it made a peak C in this last move up, but it's really in a consolidation phase. days. I had a much better reading on, see, corn is just making H's, these M patterns. So until corn can break above the 200 period moving average, this is the continuous contract, which is at 612. Unless it can decisively close in the 616s, let me go to the N. It's different. It has to go all the way to 628 to get to the 200 period moving average in the whatever contract that is, the July contract. But it is peak A, B, peak C. I can't count that as a peak because it was a low bar. So it needs very quick. If corn breaks below 581, 580, it could quickly go to 570s. But if it's able by Monday or Tuesday afternoon to get to the 605, 606, this is the contract itself, that'll say, good, leg D up, and then I will even have a target of 628. So those are the parameters I'd be watching. If you're long now, I would just make a stop somewhere around 582, 581. That's the way I'm looking at it. I hope that helps. Now let's go to KGS asked about gold. Well, this is the GC U contract. GCU, is that the one they use? No, it's GCQ. GCQ12. GCQ12, I don't like this. I just, to me, gold looks like it wants to have one more test of the 1533 to the 1529 area. Somewhere around there. If it holds, it can have a pretty good bounce. But that's the daily. My weekly chart says that gold is going into this rectangle support level, and that there's a real good chance that the 1496 area, that's my target. 1496 is my weekly target, and my monthly target is 1471. So I'm just sticking with that. I've got my GLD. I've got a peak F in my monthly chart, and it says by August, the week of August, about the second week of August, we could be testing 139 in the S&P. Wow, I can't believe it. Which is 185. Yep, that's the way it's going to be. If it breaks down, if it closes under 148, that would be my target. Okay, that was that. Nancy asked about Apple. Shame, I should have done this right at the very beginning of the show. You would have had an hour of trading Apple here. Now, Apple is just in this rectangle trading. You remember I spoke about that. If it closes underneath the 9-period moving average in the 120-minute chart, under 570, let's go to 576. It's going all the way back down to retest the 571, 570 area. So within the next 45 minutes, it needs to climb from the 577.50 area to the 578.30, 578.80 area. If it can get to 578.80 and the general market starts to move higher in the mid-afternoon, it should move higher. I have to tell you, if you're doing well trading this, you're a fantastic trader, because it's in such a tiny little range. It used to have such a big range. So I'd use 10-minute charts or something like that. But those are the parameters I'm looking at. I've got it in sell mode. Now, sell mode in the weekly and the daily. The monthly is just on a signal that says sell signal. And Google, the last one is Google. And Google, I've got in a down mode. As far as I'm concerned, Google is going lower, and 533 is my target for Google over the coming 6 weeks. So, okay, Nancy, then Monday, you know what, I'll do a 10-minute chart on Apple, and we'll show you how some scalping can be done. Thanks for being here, folks. Remember, I'm watching this real closely. I don't understand why the TLT is so weak. I'm going to be watching this with